This is Bazaar Morning Call, broadcasting live from the CNBC TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC TV18 Motilal Oswal studios. It's Thursday morning. Rima, is it? Thursday morning,
Thursday morning, and the weekend feels a lot closer now that Thursday morning is here.
Well, I'm Prashant. With me, my colleagues Rima and Nigel. Guys, hi, morning.
Hi, good morning. By the way, you guys are active on Twitter. There is a new rival, Instagram's Threads. Have you downloaded the app?
Absolutely.
I have downloaded the app. I have an account. And,
really?
I posted on Twitter. So, I mean, it's... by the way, the reason is very simple. I joined Twitter, I mean, in 2017 or something, but I actually only started posting in 2020. I mean, actually regularly using it during COVID times. So I was told that I was very late. I was really late.
So you wanted to be first this time.
So I don't know. But it's going to be the same. I don't know. I mean, you post the same content on Twitter, on Threads, or other platforms as well. At least that's my plan.
Yeah, even I'm guessing. So I downloaded it this morning and I'm on it. But I think I'll take a little time. Maybe over the weekend I'll see how exactly things go. But Twitter is really powerful. Everyone is tracking it.
You've got a blue tick also.
I've got a blue tick as well. I mean, I'm no bones about it.
Yeah.
The day it was announced, I said in that week itself I went and got the blue tick. So to each their own. I wanted it, and everyone is following it so much. So might as well cost you 6,000-7,000 rupees.
Well, it's a lot of fun following the Threads thread on Twitter.
I have to download it still.
Okay, all right. Well, let's quickly tell you how things are lined up as we begin another trading session, right? So yesterday the market pulled up. What else? It refuses to stay down. We had another positive close, not a single day of even a slightly lower close. It was up 10 points. I mean, that's about it. For bulk of the session, the market was down between 15, 20, 25 points. And then starting 3 o'clock, actually, last 30 minutes of trade, we saw a big perk up and we closed marginally higher. So 700 points in 6 sessions. I mean, although yesterday was flat, but it's 700 plus points now in 6 sessions and counting. So it's been pretty remarkable. Overnight, I mean, U.S. markets came back after a holiday, but it's been very, very quiet. So volumes were thin, relatively muted action, largely positioning-related moves is what, one picks up. S&P down a little bit, the Nasdaq down about 0.18%, the Russell 2000 down about 1.25% as well. So not very much by way of a directional cue with this set of close. We had the FOMC minutes, and I would say that there is no real new information about the timing of further rate increases, right? I mean, data dependence, etc., but doesn't tell you what something which has not already been said or the market does not already know. Odds of a hike in July, of course, have gone up quite a bit with all the data we've got. The 10-year went up, the yield 8 basis points. We are back close to about 4%. The dollar index, which has been treading water just under the 103 level, is back above the 103 by a little bit, not much. So that gets us to the levels that you need to watch for here for today's session. So yesterday, I mean actually day before yesterday, and we put this out yesterday, the Nifty had formed what was a doji pattern, which is basically the opening and the closing of the same, which means that the market is undecided where it wants to go. It's kind of right in the center. Yesterday we had another price pattern, which is basically an inside bar. It's a pretty simple pattern, which basically means that the high and the low yesterday were within the high and the low of the day before yesterday's session. They were within the candle of the prior day. And that, again, in a way, is basically an indication of a market which is perhaps quietening down a little bit. Again, kind of emphasizes the fact that after the run-up, maybe it does want to take a bit of a breather, if not more. Indecision, basically, after what it wants to do, whether the pace will be similar, and that kind of raises the doubt that maybe we are in for some, maybe a day or two of a break at least, right? If not a little bit of a pullback, which would not be a bad thing, with what I said yesterday as well. So support of the Nifty comes in at about 19,300. This is nothing but the low that we made day before yesterday. At the upside level would be about 19,494 if we were to come to that. On the Bank Nifty, we had a bit of a negative close. The pressure largely came in from the HDFC twins. On the way down, 44,600 perhaps is the level that could be used as a bit of a stop. Again, that's the low that we saw day before yesterday. The recent high of 45,655 perhaps is the upside level which comes into play. 44,600 is not the low from day before yesterday. It is a 50% retracement to the 5-day rally that we saw from the 26th to the high day before yesterday. Well, the broader market is still going strong. The mid-caps and small-caps rallied 0.5%, 0.75%, and we are seeing very varied single stock action. So there is no real pullback there. We had a bit of a break day before yesterday, the last 2 sessions, but yesterday things came right back. SGX, the gift city, beg your pardon, is indicating once again, like yesterday, a flattish kind of a start. Maybe one more session, just consolidating and spending some time not doing, big outrageous things like 150, 200 points in a single day like we've had over the past 5 or 6 days. Rima.
Aye, but the gift Nifty is just down 24 points.
Yeah.
But look at the rest of the Asian markets. They're sinking. Japanese market's down 1%. Hang Seng is down close to about 1%. The Taiwanese market has a cut of close to about 0.8%. Even yesterday, Asian markets were deeply in the red, but the Indian markets held out firm, managed to close up with marginal gains. But once again, today, Asia is weak. Can the Indian markets continue to hold firm? Just on the point about the Federal Reserve and the FOMC minutes, the House is still very divided on how many more rate hikes we're going to see. There are 18 members. 16 of them, out of the projections which were issued post the FOMC minutes, 16 out of the 18 members said we could see one more rate hike of 25 basis points, while 12 out of the 18 members said 2 more hikes are possible. So there's still some division within the members and the committee about whether we're going to see 1 or 2 more rate hikes as things currently stand. The next Fed meeting is on the 25th and 26th of July. Before that, there are 2 key economic indicators which are very important. One is the July employment data on Friday, and the second one is the inflation print. Flows continue, particularly from the FIIs. Yesterday, the FIIs bought 1,600 crore in the cash market, while the DII sold about 440 crore. And today, this morning, again, the flows could be skewed because of a large deal we're expecting in Piramal. It's also the weekly expiry for the Nifty and the Nifty Bank. And just want to quickly point out that even as the Nifty closed just shy of the 19,400 mark, the recent highs yesterday and day before are about 20-30 points from where we currently stand.
Well, that's right, Rima. Can the bears fight back on weekly expiry day? You have the dollar index that's a little bit stronger. You have crude that's higher as well. And the FI as well, they're taking it very easy. They're aggressively long on this index. But yesterday what they did was they wrote calls, and quite aggressively as well. And that's after a while we're seeing something like that. The Nifty Bank had a bit of an off day because of the HDFC twins. But, that ended at the 20-day MA, which is a crucial mark out there. Let's run you through what the FIs did first in the FNO market. As Rima said, they've been showing us the big money in the cash market. And in the futures and options space, well, they added close to around 10 longs for every 1 short positioning on, which takes the long positioning now to around 1.5 lakh contracts. That's a gross long position. I've not deducted the short positioning from there, but that's quite aggressive on the long side, and that's the highest I've seen in the recent past. In terms of the long-short ratio, well, that's moved to around 72% odd, which again is on the higher side. On the index option space, well, they unwound some long positions out there, but they wrote 83,000 calls, and they wrote close to around 4 calls for every 1 put. That's aggressive call writing that we're seeing, and we're seeing that after a while. Moving to the options data, well, the 19,450 call, well, that got written in yesterday's trading session, close to around 20 lakh shares getting added there. But on the downside as well, we did see some bit of action at around the 19,350 put. So just plugging in the numbers, support comes in at around 19,310. I know the last couple of days we have dipped and the dip has got bought into. So today, is given the kind of cues we're seeing, we're likely to see some bit of a dip. Let's see whether or not it's bought into, but otherwise that's a support zone. On the upside, going by the options data, the 19,500, 19,480 odd, that'll be a bit of a resistance. Now, yesterday the FIs wrote calls, and it appears the 45,300 call actually on the Nifty Bank, that was getting written. 20 lakh shares getting added there. The premium is around 100 rupees odd. It appears that 45,500, 45,600 odd, that could be a near-term hurdle on the upside for the Nifty Bank. And on the downside, you're looking at 2 levels, so 20 as well as the 50 DMA. You'll want that to get defended. Now, the GIFT Nifty is suggesting a bit of a downtake to kickstart trade. The big question is, the cues are in place, but can the bears fight back? And given that it's weekly expiry, well, we'll expect a volatile second half of trade. So let's see how this goes.
Okay, well, that's the setup as we see it. Before we go any further, let's quickly tell you what's lined up in the first half hour of the show. We get you updates from across the globe. We have Richard Harris of Port Shelter Investment Management joining us. And a little later after that, we'll have the top stocks, which our research team will get to you. And at 8:30 this morning, we have Siddharth Kemkar of Motilal Oswal Financial Services with things that he wants to bet on. And, of course, reacting to a lot of the news flow which has come in after close yesterday.
On the equities, Rhythm Desai of Morgan Stanley says a strong macro and improving corporate fundamentals present upside risk to stocks, while global growth, liquidity, relative valuations and a strong sentiment may present challenges. He adds the bid on shares may persist as the markets start to price in a favorable election outcome in 2024.
Okay, we've got one more equity call. This is from GV Giri of IIFL, who says, given the recent softening in commodity prices and many being significantly below the FY23 average, they've analyzed the impact on earnings. Keeping aside obvious casualties like metals, most sectors will have margin benefits. Commodity prices should stay weak as demand outlook globally is not strong due to sharp rate increases by central banks in advanced economies and weak reopening in China. IIFL expects revenue estimates to be cut during FY24, but the impact will be offset by margin benefits. Top picks include Bharti Airtel, NTPC, SBI Life, HDFC Bank, Bank of Baroda, Sun Pharma and Indigo.
Some money market views then on the rupee. Parul Mittal Sinha of Standard Chartered Bank says the USD INR continues to trade range-bound last week as the positive impact of higher FPI inflows was countered by a slightly stronger dollar and consistent dollar purchases by PSU banks. She expects the rupee to trade in a range of 81.85 to 82.35 against the dollar next week, with the dollar and oil prices being the key forex drivers.
On bonds, we've got Parul Mittal Sinha of Standard Chartered Bank, who says that domestic yields saw upward pressure last week, tracking global rates and repricing of rate hike expectations in the US on the back of stronger data. Further up moves seen in global yields after June FOMC minutes show a divide on pause. For next week, she sees the Indian benchmark 10-year yield trade between 7.05 and 7.15% range. June CPI data due on the 12th of July is in focus, and Stanchart estimates a rise in CPI to 4.8% from 4.25% in May, especially on the spike in food prices. Global yields will also stay a key market driver.
Well, we've got a lot of stock-specific action that we're tracking for you, and we'll get to that in just a bit from now. But let's run you through the list for the time being. Ujjivan Small Finance Bank, you have DCB Bank, Tata Park, KEC, Solara Active Pharma, Bombay Dyeing, Prestige Estates. Well, they are stocks on the back of positive news flow. On the flip side, you have Marico, Adani Wilmar, and Post Motors that could be reacting to negative news flow overnight.